and welcome you to Mid Cap Masala right here on ET Now. I'm Shrishti Sharma and with me is Snehisha, and over the course of next 30 minutes we're going to be telling you what all is happening in the broader end of the market. And Snehi, seems like a good day for the markets because like GIFT Nifty was indicating a gap down start for ourselves, but Nifty at the start itself managed to inch higher and is now trading comfortably above that 24,100 mark. And a lot of these stock movers, but on to the Mid Cap Masala show. Firstly, let's talk about Rosari Biotech. The company did come out with its earnings, and this time around we have seen a jump of 33% on a YY basis. But what are the triggers going ahead? How is the company planning to expand? Let's understand all of that. We are being joined by Mr. Sunil Chari, who's the co-founder and MD of Rosari Biotech, joining us on the show. Hi, very good morning and thank you so much for your time. And firstly, let's start with your earnings then. Your quarter four earnings look decent, but help us understand that which segments performed well in terms of the Indian market as well as with respect to the overseas market as well. Which segments did the best for you and what is the outlook going ahead?
We have three segments, HPPC, textile, AHN. All the three segments have done very well and have grown very well. And in the coming year also, given the uncertainty and the volatility in the world, in the geopolitical world, if things are normal, we think all these three divisions should do very well. We have done some investment in animals and nutrition and also in HPPC, especially at Unitop, but also at Rosari. And these are all things we should do well in the coming years.
Okay, Mr. Chari, this is Nehi also joining in the conversation. Let's talk about the domestic front of the business. You've said that domestic business requires clarity on tariffs and improvement in end market demand to see growth. With respect to this, how is quarter four shaped up for you and have you seen any recovery in growth?
Yeah, the textile, exports has picked up, the HPPC exports has picked up. And our textile sales mostly in India is to customers who export out of India. And this, we have seen a good demand in Q4 with even textile. Animal health and nutrition is something which also has nearly 20-25% of exports. And going forward, we see a stronger growth momentum in animal health in the domestic market rather than in the export market.
All right, Mr. Chari, help us understand that how are the raw material prices impacting you at this point in time, because geopolitically as well, there's lots happening. With respect to the prices, what sort of an impact are you experiencing at this point?
We've been able to pass through, all the pricing in the month of April. March, we had some contracts where we had to buy some raw materials at higher prices, and that impacted, gross margins in the last quarter. But going forward, we are passing through all the raw material increase pricing. Raw material availability is we have a team, supply chain team has been able to manage very well. So we don't see any effect on the gross margins. In fact, the gross margin should be better than the last quarter. But the sales is dependent on various geopolitical factors.
Mr. Chari, I was just going through the release, the outcome of the board meeting on the exchanges, and that mentions an update on your capacity addition project. I understand earlier it was delayed, and if you could give us an update in terms of what is the investment plan now, what is going to be the timeline for operations, and does this make any change to the CapEx that was allotted to this project earlier?
So 200 crores plus we already spent last year in CapEx. So we did a substantial CapEx. Board and the management felt that we should just delay the balance CapEx a little, seeing the environment, and also we should expect sales from these new CapExes in this current financial year. So we are not cancelled or it is just postponed the CapEx a little till we see headwinds are clear for us.
But Mr. Chari, the company has been performing well, especially in the textile, specialty chemicals, and your export, overseas market was also contributing to that. But at this point in time, we have seen that overall the logistic cost has gone up with respect to the transportation as well. There are some challenges, and the sentiment as well, that is also not boding up well. But how are you managing to really tackle this situation, and what is the outlook going ahead? Here too, do you believe that the domestic market will do better versus the overseas?
If you see our last, 6 years record since we did our IPO, we have had, a revenue CAGR of 25% and even the PAT CAGR of 18% in the last 6 years. This is, I think, in spite of all the issues with COVID, with supply chain issues, with the Ukraine war, with the forex, issues in all our customers, and then the tariffs, and then the Iran war. We think we have done well, and going forward for us, both the domestic consumption story and also the exports both look equally well. We are at 26-27% of our sales as export. Our internal assessment and budget is that exports should grow higher than the domestic market in the next in the current financial year.
Okay, and Mr. Chari, let's talk about your Thailand textile formulation facility as well. Earlier, it was guided for the facility to come online by Q4 of last year or early Q1. Has the commissioning started? By when are you expecting any meaningful revenue contribution from this Thailand unit?
The Thailand unit has started, and we should see revenue contribution this year. We already have had sales in the last quarter from the Thailand formulation unit. It is a small investment, but I think this year we should see sales as per whatever we have budgeted.
All right, and we look forward to that. But with this, we let you go, Mr. Chari. Thank you so much for taking the time out and speaking with us.
Thank you. Have a nice day.
All right.